How many times have you watched price break a key level, you enter the trade, and then immediately get stopped out when price goes the opposite direction? This actually happens more than you think, and that right there is the fastest way traders lose money, chasing breakouts without actually understanding what's going on behind the screen. And here's the truth that most people don't tell you: most breakouts fail, not because the level was wrong, but because your entry and timing was. See, institutions, the ones that actually move price, they don't buy breakout candles like retail traders. They wait. They let price break the level, suck in the FOMO buyers, and then they step in on the retest. And that is where the real edge is. In this video, I'm going to break down one of the most reliable price action strategies used across stocks, options, futures, crypto, you name it, called the break and retest strategy. This isn't some lagging indicator setup, no magic RSI, no overcomplicated nonsense, just pure structure, supply demand, and understanding where smart money actually enters. I'm going to show you why breakouts alone are traps, how to spot high probability retests, where most traders mess this up, how you can start using this strategy to get cleaner entries, tighter stop losses, and better risk to reward ratio. And if you've ever felt like the market waits for you to enter before reversing, this video is going to make a lot of things click. So if you want to stop chasing candles, stop over trading, and start trading with intention, lock in, because this is going to change your perspective. Before I jump into this video, I want to let you guys know that I'm going to be doing free live classes and free live trading every Wednesday and Thursday in the free Discord. The invite link is going to be in the bio, completely free to join, so make sure you take advantage of that. I do these free classes and educational videos to help you guys become better traders. I also post a lot of educational content on my Instagram, so make sure you guys are taking full advantage of that. Drop a like on the video, subscribe, follow, and let's get back into the video. Before we jump into the strategy in itself, we have to learn a very important skill that's going to help us identify the break and retest strategy. The skill we're going to learn before we jump in is being able to identify support and resistance zones, or in other words, supply and demand zones. I'm going to give you guys an emotionless, clear, and technical way of identifying it in simple steps. Step 1. You want to identify key pivot points. If you guys don't know what pivot points are are areas where price changes direction. An example of that is right here, where price makes a move to the downside, pivots, makes a move to the upside, pivots, makes a move to the downside, pivots, move to the upside, pivots, downside. Right now it looks super messy, but you just want to take your crosshair, you want to just hover down until you horizontally align multiple points. And as you can see, we have point 1, 2, and 3 horizontally aligning each other. And that is going to be our resistance. Now we can go in and do the same thing for support levels, but in this example, or in this strategy, the main thing we're going to be focusing on is resistance zones and resistance levels, because the break and retest strategy really depends on us breaking the resistance, retesting it as a support, and then making a move to the upside. So now that we learned the simple skill we need to be able to trade this strategy, we're going to jump into an example of how to draw it and how to use it properly. We're just going to be looking at an overall structure where price is consolidating, and you can see that we have clear support levels right here, which we're going to for now ignore, but we also have clear resistance levels, right? So what makes this a valid resistance is all of these tiny rejection points that we have off of it. Using our crosshair and hovering down, these all relatively horizontally align with each other. So I'm going to go in, pull out my box tool, and approximately eyeball a resistance zone. And for the sake of the video, I'm just going to draw in a support zone as well. So what typically happens with the average trader is the average trader is going to wait for a break of this resistance, and they're going to try to take an entry off of it. I'm going to show you guys why that isn't going to work and how that gets you caught up in a liquidity trap. So as you guys can see, we have common resistance in this area that eventually gets broken at this point right here. The average trader is going to enter a long position on the break of resistance, probably set a conservative stop loss right below the resistance, and target a 2-to-1 risk to reward ratio, and end up getting stopped out. This is a prime example of a liquidity trap. This is exactly what you don't want to do and what you don't want to fall into. So what the smart trader is going to do is, instead of waiting for price to break resistance and fall back down, the smart trader is going to wait for price to break resistance, retest, hold it as a support, take entry off of this support, and ride the trade out. And if you can avoid the liquidity traps, you guys can see eventually price will break resistance, come back down to retest it as support, and that support retest is where you want to enter your long position. It's going to help you avoid and identify liquidity traps, only take high probability setups, and give you much cleaner entries, tighter stops, and better risk to reward ratio. The strategy is fairly simple to use, guys, and it doesn't take a rocket scientist to learn it. It is heavily price action based, and it uses supply and demand, or in other words, support and resistance. I'm going to show you guys a more recent and valid example using an index fund like QQQ. So looking at our structure here, we have a clear resistance in this area. Using the resistance that we have, we're going to draw in our zone, and eventually price is going to break this zone to the upside. Now you want to avoid entering on the initial break once again. You want to wait for price to come back down into it, use it as a support, and once you have confirmation that is actually support, you can take your entry off of it and ride the trade up. That basically sums up this video, guys. If you guys truly enjoyed this video, please consider dropping a like on it, subscribing, and following for more. I post a lot of educational content on Instagram, so be sure to follow my Instagram at Tito Trades. And I also post my trades on a daily basis and host live classes in the Discord community, so make sure you guys join that through the link in the bio. Other than that, I hope you guys enjoyed this video and found it helpful, and I'll see you guys in the next one. Take care.